Billionaire investor Chamath Palihapitiya expressed concern about growing inflation, prompting him to rethink his investing strategy. Palihapitiya, a former Facebook executive who now leads venture capital firm Social Capital, claimed on Twitter that markets have been on a roll and almost everything appears to be at all-time highs. Is an economic downturn in 2022 a possibility given the string of economic hiatuses over the last 2 years? If you are new to our YouTube channel, please subscribe and click the notification bell to avoid missing new content. The Near Association will regularly add videos to keep you posted on the latest in business and finance. 2022 recession is possible, according to Chamath Palihapitiya. In 2022, the U.S. economy is likely to decrease. The Federal Reserve's policy will increase business cycles, for which many businesses are unprepared. The drop is not predicted to begin until 2022, but it may occur sooner. If the Fed avoids recession in 2023, a significant correction in 2024 or 2025 is likely. While a lack of demand is typically the cause of recessions, supply constraints can also play a role. Demand for products and services will be high in 2022. Due to yearly salaries, stimulus funding, and expanded unemployment insurance, consumers are loaded with cash. Businesses like individuals maintain a sizable cash reserve. Profitability has been good, and the Paycheck Protection Program has benefited firms to the tune of about $800 billion. Businesses purchase computers, equipment, and machinery to compensate for absent employees, which helps equipment manufacturers. As an early executive at Facebook, Chamath rose to fame in Silicon Valley. He made headlines a decade later when he said he did not allow his kids to use screens and felt tremendous regret for his role in developing a deadening social networking platform. Chamath believes that by reinvesting in businesses rather than directly assisting American workers, he effectively extends economic developments that are already occurring. The more money we spend and send to zombie firms, the further down the road we will kill the can. How well do you know Chamath Palihapitiya? Chamath Palihapitiya contributed significantly to the development of Facebook, although it is not why he is so well known. Many individuals no longer link him with the success of the social networking site. He competed in the 42nd and 43rd World Series of Poker, finishing 101st overall out of 6,865 competitors. He previously sponsored the neighborhood's most popular poker night, drawing some of Silicon Valley's most influential personalities. However, most people believe that Palihapitiya's fame stems from his sincere philosophical beliefs. Chamath is a vocal advocate for economic injustice, social justice, and a lack of diversity in STEM sectors. His verbal hostility to social media is perhaps the most surprising aspect of his approach. He maintains that he does not use Facebook and does not permit his family members to do so. He actively discourages others from using social media and claimed in 2017 that he was instrumental in the creation of Facebook. Palihapitiya began his career with American Online, or AOL, rising to the group leader position for the company's popular AIM Chat product. He quickly established himself as an innovator, earning him the distinction of becoming AOL's youngest vice president in company history. Palihapitiya began his career as a venture capitalist at the Mayfield Group and later joined Facebook as a senior executive. Palihapitiya received a hefty compensation package from Facebook, and his achievements were recognized with substantial incentives. Chamath is worried about inflation. An investor named Chamath Palihapitiya is worried about inflation, so he has begun to hedge his portfolio with 3 different types of assets. CNBC reports that he is really concerned about inflation in the medium run. When asked how high Bitcoin's value could increase, Palihapitiya could not provide a specific figure, instead stating that the cryptocurrency could dethrone gold. Palihapitiya's statement comes just days after China entirely outlawed cryptocurrency trading. China's move has thrown the cryptocurrency market into disarray. One of the things he wants to see is a return to hypergrowth, which can always outrun inflation. Prioritize investments in cash-producing assets, followed by non-correlated assets. Hypergrowth companies, according to Palihapitiya, are those with annual growth rates of at least 50%. Examples of technology businesses he helped go public via exceptional purpose acquisition companies include Sophie, Open Door Technologies, and Clover Health. When it comes to mining stocks, Palihapitiya recommended them as a way to make money while you invest. Palihapitiya suggests non-correlated assets like Bitcoin or Solana as a third type of inflation hedging investment. The Solana blockchain network is CoinGecko's sixth most valuable cryptocurrency, 1.5 years old. He called them a phenomenal contrarian hedge. Palihapitiya asserted that Bitcoin has already displaced gold as the world's reserve currency and that this trend will continue. Bitcoin's value may one day reach $200,000, Palihapitiya previously predicted CNBC. Digital currency is currently worth over $41,000. Despite this, a cryptic prognosis was provided by the former Facebook executive. The commissioner's opinion is that cryptocurrency is nothing more than an internet iteration and so will be impossible to govern. The stock market is down. According to billionaire investor Chamath Palihapitiya, billions of dollars sitting on the sidelines waiting to leap back in. Following the recent severe drops in the market, Palihapitiya remarked in his podcast All In that he believes the market has lost everything. This year's stock market losses are being blamed on investors, bracing themselves for a significant rise in effective rates from the Federal Reserve in 2022. Money market accounts and municipal bonds have trillions of dollars to invest in. There were two sides to the story. The billionaire tech investor said that one perspective based on the past didn't mean that the sell-off constituted a purchasing opportunity. The S&P 500 has lost around 0.25% this year. Because the Nasdaq 100 index is down by 5.5%, it's clear that technology businesses have been hit particularly hard by the downturn. Due to the Federal Reserve's plans to boost interest rates later this year, investors have shunned high-risk technology companies. Interest rates and the economy's current state are more tightly linked regarding financials and retail. According to Palihapitiya, an ex-Facebook executive who has founded several high-profile acquisition firms, the Federal Reserve delayed raising interest rates to combat rising inflation a bit too long. Please share and like this content and let us know what you think by typing your comments below. Keep your notifications open and I'll see you on our next video.